$3 trillion industry. If we just extrapolate the trend rate of growth and the number of wallets and all of that stuff, we get to 100 trillion by 2034. We're 3% of the way there. You've got to fight yourself in this market. It's always your own psychology is your worst enemy. When it just feels the worst, that's when you should be putting as much money in as you can. I mean, I try not to give price projections, and I know you always pin them out of me, but the point being is, we're very public on social media, and it's just people pin their hopes and dreams on a number you give them. But my general thesis is we will rally into year end. We will correct at some point. There's a bunch of hedge funds and RAAs and others who are into this who will need to take a bit of profits into year end. I think we'll get a bit of a shakeout, global liquidity slowing down somewhat, and then we should re-accelerate into the end of tax season. So my view is Bitcoin easily gets to 100 this year, and probably is 150 plus by March before it corrects again, and then we finish the year after a larger correction with a very strong rally into the end. So that's how I think it plays out probabilistically.
So when you say a correction, we're at 150, it corrects back to 80?
Yeah, maybe something like that.
Yeah,
maybe less. Maybe 30% correction, so back down to 100. Kind of makes sense to me.
Right.
And it'll feel miserable, and people will say, "Has the cycle peaked?" and all of that noise.
Right.
And then usually we end the second year after the presidential election cycle very strong, and then it peaks out sometime there.
Okay.
If I give a range of targets, as opposed to pinpointing a target, worst case is 150. My base case is 250, and in an obscene bull market because everybody's buying, driven by a change of regulation, then it could go as high as 450.
Okay, let's go to Solana. I want to ask you the same questions related to Solana because I know you're a bull there.
Yeah, so I think Solana finishes this year closer to 400 than it is to 200. So I think
this year, 6 weeks ago,
maybe 350. I mean, it's a higher beta asset, so it should do better. So I expect that to happen. I think, again, it'll follow the same kind of price path as Bitcoin, but it should outperform all of the way. It's been in this consolidation versus Bitcoin, sideways consolidation. The next leg should be altcoin season, and Solana should be the king of the major alts. So I'm kind of expecting Solana from here to probably get to over 1,000, 1250, something like that.
All right, last one, Ethereum.
Ethereum has been a laggard. I think it plays some catch up. I think it outperforms Bitcoin going forwards for a bit because, if we sit back and look at what the regulatory changes might be, that is the platform upon which most of the institutions will start doing stuff. It's the Microsoft decision. Every bank has Microsoft computers, not Apple computers. So I think that Ethereum actually does better than most people expect going into the end of the year. Again, same price pattern. Outperforms Bitcoin, Solana outperforms Ethereum. So it's the risk curve.
Is Donald Trump going to put 1 million Bitcoins on the balance sheet of the United States, on the Federal Reserve balance sheet?
First, I think this is a bit of a red herring because as the world's reserve currency, you don't need to hold reserves in anything else. Right? So that's why the US doesn't hold a basket of euros and yen and other shit. It doesn't need to. It's the world reserve currency. So they don't actually need currency reserves or national reserves. They have a legacy of gold, of which we don't know how much is there. So the way to do this is probably to say, well, any Bitcoin or cryptocurrency that's been seized, we'll put it in the reserve. And that's a way of appeasing the crypto crowd without, there's no point to have a reserve. Maybe they do. Maybe they think that that's going to help them. But the worst thing it's going to do is just strengthen the dollar even further. And that is not good. A very strong dollar is a wrecking ball for the rest of the world. And without global trade and global demand, everyone goes through a recession. So you've got to kind of be careful of what you wish for. It's currently today a $3 trillion industry. Think of this scale. It's a $3 trillion industry. If we just extrapolate the trend rate of growth and the number of wallets and all of that stuff, we get to 100 trillion by 2034. We're 3% of the way there. We've got 97 trillion of wealth to create in this space.
Mm-hmm.
We've barely started. I know we all use that phrase, we're so early, but the adoption of this technology as the financial system starts to operate on its rails, so you have instant settlement for equities and bonds and all of that. The transfer payments, even central bank digital currencies are on these rails. Everything folds into these rails. RID, gaming worlds, all of these things. Well, if we're 3% of the journey, it's all to play for. This is the biggest trend we've ever had.
Go to the next question. From a macro perspective, what roadblocks to delivering on campaign promises do you foresee the Trump 2.0 administration encountering in the first year? This is Maureen from Pennsylvania.
Well, this is more one for you to answer because I don't really know. You're more used to the ins and outs of the political system.
I guess what I would say to Maureen and others is that there are systems and formal processes in place that slowed down the last Trump administration, and will likely slow down this administration. Now, the administration is trying to hop over some certain systems. They don't want to do FBI background checks. They want the Senate to immediately confirm their people with very little deliberation in the Senate body and things like that. But I don't think the system's set up like that. If you like Donald Trump and you see him as an agent for change, he will make changes. But the truth be told, that system in Washington has a very big immunity. The immunological system to reject an antigen like Donald Trump is in place. It's going to make it hard for him. So I don't think a lot's going to change, Raoul. I think on the margin, some things will, maybe a tax cut here or there, maybe an elimination of the SALT deduction, which he's saying he's going to do, allow us to return back to deducting our state and local income taxes. I don't know. We'll see. But I
kind of that same way as well. Is the political process is a quagmire, and you can say a lot, but what ends up getting done is much less. So think of Obama. He got a clear mandate. He struggled after even after the midterms, after the first year. It's just really hard to get stuff done. So we'll see.
Okay, let's go to the next one. Raoul, what would be India's stock market situation in the next 3 months or long term? Manisha from India.
So if we think about that trend rate of GDP formula
that question is for me, Raoul, really, because I'm the Indian on this. I'm kidding. Go ahead, keep going.
If the trend rate of GDP is driven by population growth or working age population growth plus productivity growth plus debt growth, Indian households have low debt. Indian government has decent amounts of debt. Households are low leverage. Productivity is going to be from building roads, putting in the infrastructure that's required, and population growth comes from the fact that the average age is 28. This is like golden demographics. So India, over a long-term time horizon, is very good. The only thing that can upset that apple cart for a while would be a very strong dollar, but it's being offset currently by falling oil prices, which is the big input for India. So I've been bullish India for a decade. It's been the best performing market in the world for a long time now. So keep going.
All right, let's fire in another question. What is your outlook for financial markets in the next year? Ajit from Canada. That's for you, my brother.
Up.
Yeah, I agree. I don't see anything stopping this, and lots of earnings, by the way. Lots of earnings upside surprises. Let's go to the next question. What are your thoughts on AI's potential impact on job markets, especially in finance and other knowledge industries? This is Lisa from the UK.
So firstly, we will notice that as the business cycle expands this time around, they'll hire less people. Investment banks generally, when times are good, start piling on the people and then fire a bunch of them. I think we'll see less of that. And then when it comes to the downturns, they'll just be cutting leaner. So I think the number of people working in finance and knowledge industries, lawyers, accountants, paralegals, all of those kind of things, will just be declining as a percentage of the overall workforce. I don't think there's a mass layoff. We're all firing our lawyers. I just think as firms grow over time, naturally with the economy, they'll just hire less and less people, which is also fine because we've got an aging population. So a lot of people are falling out of the labour force. But yeah, that's definitely the case. So I think unemployment, it's starting to rise a little bit. It probably remains stickier for longer. And then the next cycle, it picks up a bit more. It's just this slow change. It's not like the steel mills in Pittsburgh shut down overnight. It's a process.
Yep.
It's not an instant thing.
Yep, I agree with you on all those things. Let's go to the next question. Why do assets like lower price houses increase in value in line with liquidity and depreciating dollar? Why do assets like lower price houses increase in value in line with extra liquidity and depreciating dollar?
Yeah. So
Jay from New York.
So what happens is when you debase a currency, you don't really see it. What happens is it looks like assets are rising, but they're actually not. It's because the purchasing power of your dollar is going down. So you're working your arse off every day, earning money, and you can buy less of a share of a house all the time. That's because earnings are not driven by debasement because they're a variable input. But this fixed asset, gold, real estate, crypto, equities, are all scarce assets, art, wine, and they all keep going up. So that's why one of the reasons the rich get richer and the poor get poorer in this environment is this process of debasement. So what you're seeing is that house prices, they're not going up or down in value. It's the purchasing power of the dollar that's going down in value. That's the real issue here. That's why we saw the 50% rise in house prices everywhere in 2020, 2021. Why? Because we printed a massive amount of money. So it made the dollar less valuable.
Okay, let's keep going. What do you think about gold? Rose from Florida.
Gold is also driven by monetary debasement, and it follows global M2 essentially. So I don't think debasement goes away because we've got to pay the interest on the debts and service the existing debts. So gold probably goes higher. I just like gold less than crypto because it's a similar trade, but crypto has a much, much higher beta and a higher risk-adjusted return. But gold should be fine.